Hi there, I'm Irk, and this is my channel, Get Irked. In this episode, GrowGeneration, can supplying picks and shovels help your portfolio mine the cannabis gold rush? In this episode of Speculating In, we're going to be taking a look at GrowGeneration, ticker symbol GRWG. GrowGeneration operates a chain of retail stores throughout the United States that sells retail hydroponic and organic gardening solutions so that you can grow at home. Naturally, as you might expect, this has a specific target on the cannabis sector, so if recreational cannabis gets legalized on the federal level, GrowGeneration stands to be extremely profitable as a picks and shovels play. The term picks and shovels came from the California gold rush, where the people who sold the picks and shovels made more money than a lot of the gold miners did, and that's kind of this play with GrowGeneration. Rather than exposing your portfolio to the specific company risk that could come from American cannabis, by investing in GrowGeneration, you're getting exposure to the entire space because GrowGeneration is agnostic. Everyone will be buying from GrowGeneration. First, we're going to take a look at GrowGeneration's fundamentals, and then I'm going to give you a buying plan of what I would do if I didn't currently hold a position in the stock. After that, for those of you who don't typically stick around for my own play-by-play, you'll probably want to watch this one because this is one of those speculative investments that I turned from a winner into a loser, and I'll discuss the mistakes I made and what I would do differently in the future. Taking a look at GrowGeneration's fundamentals, you can see that it has an earnings per share of 31 cents a share, so it is a profitable company. However, despite dropping nearly 75% from its highs, you can see that it has a PE ratio of 58.41. As I have discussed in previous videos, a growth stock is considered overvalued if it has a PE ratio of over 30, and a non-growth stock is considered overvalued if it has a PE ratio of over 20, so 58.41 is seriously overvalued. And that's a stock that's dropped nearly 3/4 of its value since its high, so you could see exactly how crazy the valuation on GrowGeneration is. Even with a one-year price target nearly double from here at $34.88, GrowGeneration is still considered overvalued by every metric, including Yahoo Finance. However, there's a lot of news lately that Congress is reviewing a number of bills that would take serious steps towards the legalization of cannabis in the United States, so the overvalued nature of GrowGeneration might not be the case by the end of 2021. So let's take a look at GrowGeneration on a chart, and I'll give you a buying plan of what I would do if I didn't currently hold a position in the stock. So starting from the pandemic low, let's use Fibonacci retracement to draw from the bottom all the way to its all-time high in 2021 to develop levels where we could buy the stock. You can see that although the Fibonacci retracement seems to be pretty accurate looking at the price action in the past, that you'll notice we're already approaching the 78.6% retracement line, so we should draw an additional Fibonacci retracement to offer as buying levels in case the 78.6% level doesn't hold. So let's draw from this key bottom here to this high here and see what kind of levels we can develop from here. So let's zoom in on the chart and see if we can find some places where it might be an interesting place to start buying the stock. You can see that we have a lot of price action around here, so I might actually be aggressive and start at the close of this day here at $17.86. In fact, depending on how aggressive you want to be, you might start at $18 or even $18.05, $18.07, because you want to avoid people who want to buy right at that round figure. It might sound a little crazy, but a lot of people really want to buy at that flat $18 mark, so if you shoot a little bit higher and even a little bit odd like $18.09, you're more likely to get hit, whereas a lot of times during a pullback you'll see a stock stop right at $18.01 and then you won't get hit. When I'm talking about a speculative investment, I often only buy 30% or less instead of buying my typical 50% as I would in a long-term investment. However, given that GrowGeneration has already sold off nearly 75% from the high, my strategy would be different here. I'd actually start with a 50% position and then save 50% to buy in stages on the way down, 5 separate buys of 10% each. So now that we have our first buy, let's find 5 additional buys where we could add to our position on the way down. If our first buy was at $18.05, you can see that the 38.2% retracement at $16.44 does have a lot of price action in the past, so you might consider that one for your next buy. For me, I find it interesting that it found support at the bottom of this day, which is actually above the retracement at $16.52, so this might be where I'd make my second purchase. From here, we go down to the 50% retracement at $14.45, which also has very key price action in the past, and you can see that it did find support this day right above it. So that might be my third buy here at $14.52. From there, we zoom out a little bit, and you can see the 61.8% retracement kind of has a bit of a gap. There was one day where it did pop through it, but there really isn't anything between the 61.8% and the 78.6% retracement. So for my fourth buy, I would probably use this low here at $11.26. From there, rather than using the 78.6% retracement at $9.62, you can see there's significant price action down here. So I would probably use the low of this day and make my next buy at $8.56 or around there. For my final buy, I would use the bottom of our retracement, and you can see, like I said earlier, it's not a round number, it's $6.01, and you can see there is price action here, and there's this pullback here at $6.01 as well. However, if you wanted to be a little bit more aggressive, you might shoot a little bit higher and use the open of this day here at $6.11, which would ensure that you would catch the bottom in case it fell down to $6.01. When you're talking about 10-cent difference at this kind of a pullback, I don't mind paying up a little bit to get a full position. With all this being said and our plan set, I honestly don't know if we would pull back quite this far unless we see another black swan event. Because of the amount of price support that you see here around $13.50, I really don't think we'll see it pull back much further than that unless there's really bad news in the cannabis sector. So you'd be looking at having a position of about a 70% allocation, your 50% initial buy, and then our two 10% buys after that, without it really probably going much lower than that. For me, I tend to be pretty conservative. I like to plan for those black swan events, particularly since I've seen several in my years of doing this, and so I end up being much more conservative than a typical investor or a trader. So from here, let's take a look at my own investment, and I'll give you a play-by-play of where I started, how I had a winner, how I royally screwed it up, and where I plan to go with my position from here. I made my first buy on October 30th of 2020, and because it had only just recently made an all-time high around $23, I started with only a 20% allocation at $16.04 because I thought it might pull back. Instead, it resulted in a very high-quality problem where GrowGeneration actually went significantly higher from where I bought. So when GrowGeneration had more than doubled in less than a month, I followed my discipline and took half of my position off the table so I could play with the house's money. I made my first sell on November 23rd, 2020 at $32.26, which lowered my per share cost to negative 19 cents a share. However, GrowGeneration was far from done and only continued higher from there. It was at this point that I made my big mistake. I started feeling FOMO, or fear of missing out, and realized I wanted a bigger position, so I decided to buy up my cost basis. Long-term watchers of my channel will know I hate doing that. I hate buying up my per share cost, and GrowGeneration is one example of why I hate it. On January 27th of 2021, I made my second buy when it pulled back a little bit to $44.31. This raised my per share cost up to $22.06, which is higher than the $16.04 starting place. Initially, this looked like a good idea because GrowGeneration continued higher from there. A few months later, on May 11th, I decided to add even more to my position with my third buy at $37.24. This further raised my per share cost up to $27.12. But since GrowGeneration had made an all-time high of $67.75, this was almost a 50% pullback, so I thought adding here would be a good idea. I was wrong. I made my fourth buy on a pullback on August 12th at $35.64, raising my per share cost to $29.25 because there was so much support there. I didn't think the bottom would fall out, and this is when the bottom did fall out. The cannabis sector got hit really hard in 2021, and GrowGeneration was not exempt. It dropped through my new $29.25 per share price by such a significant margin that I decided to wait a little while before I continued to to add to the position. I made my 5th buy on November 12th at $21.10. This actually lowered my per share cost to $28 per share. However, GrowGeneration was still not done selling off. On November 18th, I made my 6th buy at $21.10, which lowered my per share cost to $26.85, followed by my 7th buy just a few days later on November 24th when GrowGeneration fell all the way down to $17.40, with this buy lowering my per share cost to $25.50. However, I don't know if GrowGeneration is done, so I have additional buys from here. I have an order at $14.70, another order at $11.55, and even more lower than that. GrowGeneration serves as a reminder for me to follow my rules of discipline and not feel FOMO. Even if I have a smaller position than I want, it's better to have a small position that's a winner than change a winner into a loser like I did with GrowGeneration. With that being said, I still believe GrowGeneration's long-term prospects make it an excellent speculative investment for me, so I'm not going anywhere and I will continue adding to it on the way down. However, I really do wish I had resisted the FOMO in order to be successful in this position instead of being underwater. Thank you for watching. Please hit like and subscribe, and I'll see you in the next video.